Welcome to Business Today, live from New York. I'm Michelle Fleury. We begin here in the United States, where markets have just opened higher, the S&P recovering after its worst day of the year on Friday. One of the big movers this morning is Apple. It says it will spend more than $500 billion in the United States over the next 4 years and hire 20,000 staff. This comes after President Donald Trump pushed companies to shift their manufacturing back home. Plans include a new factory in Texas, doubling Apple's US Advanced Manufacturing Fund. Now, this new factory is expected to make AI servers. But Apple is just one company announcing new investments in the United States, this onshoring trend, which is gathering pace. Skylar Weyand, Chief Investment Officer at Regan Capital, joins me now. Skylar, great to see you. Do you think Apple would be doing this without Donald Trump?
Oh, for sure. I think they're kind of on their heels, competing with Meta, with Google. It's an arms race to get in front of this AI revolution, which is going to be just as important as the start of the internet in the 90s. But you're seeing this big bifurcation also announced this morning. Starbucks is cutting 7% of their employees, and now you have Apple hiring folks. And so it's this tale of two cities, really, in the U.S. here, particularly on what's moving forward and what some companies that are pulling back a little bit in order to save margin, save profitability.
So, I mean, in the case of Starbucks, I'm glad you brought that up. I mean, they've announced they're shedding, 1,100 corporate workers, part of the new CEO's attempts to kind of right-size the company. Is that what we're seeing sort of in more traditional areas, service sectors, which perhaps are not the bright spots in the way that technology has been?
Yeah, pretty similar to what's going on in the government, where, hey, let's cut 7%, let's cut 10%. I've seen a lot of those headlines recently, and let's figure it out. Let's figure out how to do this operation more efficiently. There was an article in the Journal this weekend about spending of high-income workers versus low-income workers. And so it's this, we're moving in a direction post-quantitative easing, post-COVID, post-stimulus, where there's going to be some winners and losers. And if you can pick the winners, and they call it stock pickers market here, but there's going to be a lot of shifts into AI, away from traditional corporate environment, and let's try and figure out how to do more with less. Let's maintain profitability, let's maintain margins with less overhead. And so the companies that are able to do that are going to do really, really well. But if you're a Google, a Meta, one of these companies with a ton of cash, you have to spend money right now.
And I guess we're going to be hearing from one of those potential winners later this week, NVIDIA, the AI darling reports later in the week. Skylar Weyand, Chief Investment Officer at Regan Capital, thank you for joining us this morning.